Good day to one and all. This is Dr. Sibaram of iknowindices.com. I was giving between 11:30 and 12 GMT the pre-non-farm payroll data release and also the trade calls. I was giving the forecast that they are expected to make a small dip before that of the non-farm payroll release, and you might come across that the data might be positive to that of US dollar, but still they can gain the levels in the case of euro and GBP and say that it could be risk appetite, or they can give any sort of interpretation. So now we are on 15:30 GMT. For about 15 minutes, I will just review what has happened earlier during that of the non-farm payroll release, and also discuss about the results of the demo trading account. I gave some calls and show you how exactly they were giving that opportunity for us to book profit. So first of all, I will just go to that of the forecast part of it. I was telling you that before that of the non-farm payroll release by 13:30 GMT, they are expected to make a slide and then start gaining the levels. So even though you know that very well the non-farm payroll data was positive to that of US dollar, they still gained the levels, giving certain other attributes. And I was telling you that they will just make the drop in the case of USD CAD and also USD yen in a big way, because they have been consolidating at a higher level with a brief upward stop end. So they made a big drop in the case of USD CAD. Then we have seen that euro, they gained the level up to that of 1.0652 and then started making the slide, and still it is holding around 1.06, and slowly they are expected to make the swing during the early part of the European session, sorry, the US session. So US session is for 1.5 hours as the early session, that is from 14:30 to 16 GMT is the early session. Then the mid session comes, and from 19 GMT the late session starts. During the late session, you will come across more visible US dollar weakening move happening in the market. So slowly they will firm up, inducing the traders to sell euro and GBP, giving that impression to them that they don't have strength to go up, so that once they take sell position, they will be able to book profit towards the close. But the players will accumulate such sell positions and firm up and induce the short sellers to go in for short covering. But they will do the big beginning false move next Monday. At that time, they will make the slide, but not before that. So it is not advisable to go in for short selling. Now coming to that of the calls, in the case of euro, it was not making much of a dip, and it came down to 1.0595 and started gaining the level. And in the case of GBP, when I was talking, it came down to 1.2140, and then they started gaining the level. And in the case of Australian dollar, they came down to 75.15 and started gaining the level. Then in the case of yen, they went up to 115.50 but did not make an upward spike. It indicates that predominant of the traders have done the short covering and turned long. That is why after the consolidation, they started making the slide, and they are expected to make more slide slowly during the course of this particular session. So you find that as envisaged, they have made the US dollar weakening move in all currency pairs. And till yesterday, they have been doing the US dollar gaining move, keeping the uncertainty for that of the traders that US dollar might strengthen further after that of the non-farm payroll. Even though the data was positive to US dollar, they just made a unexpected move for that of the traders. And this is what the players do every time. So we need to understand that the players are here to create the market sentiment and act against that of the traders. So once you understand that, you will not give much importance to that of the data and fine-tune levels of the data, etc. That might be useful for those who are writing articles about the fundamentals or about the various type of data release, and also what could be the impact of such data in the economic conditions of the countries. But as far as the traders are concerned, from second to second, the fundamentals cannot influence the market. So hence, in order to give convincing answer to that of the traders, they said that the market follows technicals during the non-data release time. But the fundamentals, they simply change afterwards. And later on, you come across that the market follows technicals. And once you follow technicals and take positions, and then they say that fundamentals are different from that of technicals, and the market can make its own move, and hence you come across the disclaimers. So ultimately, you find that the market is expected to create surprise for the traders from time to time. So when such a thing has to happen in the market, so we need to read the intentions of the players rather than trying to focus on something else. See, now you can see that suddenly they started gaining the levels from that of the late early part of the session. So they gained the levels in the case of Euro and also gained levels in the case of GBP, and slowly they are expected to take up the market further up. And as I explained that many times, once they make more than 75 pips net change level, and they are unlikely to reverse it on the same day. So you can understand that towards close, they are expected to gain more levels in these currencies, and thereby we'll be able to really see some good profit. If you have got any question, you can ask me. I'm willing to answer those questions. So basically, we need to understand that the players wait for the data release or for the rumor or any of the speech. They are all nothing but the attributes for that of the players to make the moves, and they can give different type of interpretation for such data release, and those interpretations are going to be used for the market to make the moves. So ultimately, if you follow strictly the data, you might still continue to be surprised, because the interpretation for that of the data is vital. So when you follow the interpretations, then it might sometime exaggerate the data, or sometimes it may discount and talk about that of the next data which is going to be announced. So when you think that non-farm payroll might be having an impact, then suddenly they may say that no, it indicates that the interest rate decision may not be happening immediately. On that basis, they will simply gain the levels in the other majors. So if you try to look for some interpretations, then they will give a different type of explanations and continue to make the move, or simply say that there is a rumor in the market and because of that the market has moved. So you are not very sure when such things are going to happen in the market. So in order to limit the risk, we need to use the hedge order instead of the stop, so that once you keep the hedge order to limit the risk, and when they are not filled, it is very similar to the stop, and we can keep stop at entry and remove the hedge order. Thereby, we don't incur any loss in our trade, and we can try to wait for the market to move in our way and then try to book profit. So, what is more needed here in the need of the hour is that we need to understand in which way the players are going to make the moves in the market from time to time. And as I explained that which currency they are going to make a move first. So always keep in mind among the numerators, the currency which is making more pip change will move first. Like now euro, followed by that Australian dollar. Then GBP, which is making negative net change, it has to come to positive net change, and then it will start following it from that other mid session. Then in the case of the denominator currencies, the currency which is making the more negative net change will move first, then followed by that of lesser net change currencies will move. So here you come across USDN is making positive net change. It will be the last one to drop. So what they're trying to do is they are just gaining the levels in the case of euro, gaining the level in the case of USDN to dump again euro yen positions. So this is how they make the moves, contrarian moves in the market. So we need to understand how they are making moves from time to time. And with the help of the live market quote page, we'll be able to really understand what they are trying to do. Then accordingly, if we commit positions, we'll be able to really make some good profit. If there are any questions, kindly ask me. I'll be willing to answer those questions. Otherwise, I'll conclude the webinar. It appears no question is coming forward. So I'll just conclude the webinar. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar. I'll come back on Monday and give you the next week forecast during the Asian session live market analysis. So wish you all the best in your trades and try to read the intentions of the players and try to earn money rather than getting your mind distracted. Wish you all the best.